Back to the well. That is the title of today's show, and we are not talking about oil. We're talking about our good old hardware stocks. You know, they're getting kicked around for a couple days while Mr. Softy rallies and Palantir perking up today, but hardware. Let's see how that trades today. We got some nice gains, nice intraday reversals yesterday. We'll talk about the technicals on those. We got some earnings, nothing super exciting. We'll give you a war update. I mean, we'll talk about Chinese data center ban. We got a lot of stuff. 8:35, Joe Saluzzi is going to follow up on some topics from last time. We'll talk about Jeff Bezos selling $4 billion worth of stock. It's down now, but I mean, how much does he own? Folks, we're really fired up on this Tuesday. We're glad you're joining us. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, we're looking at some charts brought to you by TradeStation Securities. Trade smarter, move faster, and stay in control with the platform built for serious traders. We want you to chart, analyze, customize, and do it all in one platform. More green on the screen, inching up. Well, depends how you look at it from futures, all-time high versus the cash SPY. Anyways, we're at all-time highs. The buck quiet at 99.80. Taking a look at that. TLT. I mean, who wants to own bonds when you can make 5-10% a day? Up 22 cents at 82.41. We got a deal. USO. That's in the tank. Down 440 cents at 117.66. Gold and silver up. Silver really the big winner here, up over 2%, and the SLV, that's a $1.15, that's 53.61, and GLD, but still, those charts look good to you? I don't know. We'll discuss that perhaps later in the show. In Bitcoin, trading range, trying to get over the 50-day moving average. Let's just call it flat here. 64K in the Bitcoin futures trading. Triple D Tuesday. This is a busy Tuesday, huh?
There's so much happening. Head on a swivel. So many earnings stocks, so many macro headlines, so many ETF effects that I can't even stay ahead of them anymore. Bring the Brentster in here because he's watching the news wire and he's breaking the news and he's coming in here to help us out as well. What's going on, Brentster?
Hey, good morning. Good morning. How's everyone doing?
No tangent Tuesday. Okay.
Tangent Tuesday.
What's wrong with
we'll try. We'll try
we
not
like
to.
Tangents. Tangents are fun. You know, you have a little side quest. You're like, oh, let's talk about this for a sec. Let's get back to the main trail.
I just went on a tangent by saying no tangent.
Look at what happens.
All
so
right.
do we get an update overnight on the war front?
You tell me.
Yes, we got a rhetorical question.
We have so many updates on the war front all the time. It's going to be a deal. It's going to be the best deal ever. No, it's Besson, actually. It was on CNBC about an hour ago, half an hour ago. So multiple headlines here. Some coming from Qatar. So we have
language has been drafted on a possible U.S.-Iran deal. Oil fell about $3. This headline must have been right around little before 7 a.m. Treasury Secretary Scott Bessent on CNBC interviewing just a few minutes ago, actually about 10, 15, 20 minutes ago. He said that there is a possible deal that could be announced today or tomorrow to get the Strait of Hormuz open. We have oil falling much lower, as Bessent saying that. We have oil trading around 77.50 or so right now. That's WTI spot.
Oh, around and around we go. Deal or no deal. This is going to go on for the rest of our lives, asking Joel, for a friend.
You're
is this going to just
me?
continue forever? I mean, Bessent's on CNBC. Oh, yeah, we might get a possible deal tomorrow. It's just made up. Like say anything, say something to make the stock market go up. Say something to make oil go down. I mean, this is where we are. Is there a deal? I think Lazard maybe said it best. They were just on CNBC2 talking there as CEO from Lazard, and they were talking about, the whole situation. And he said, any deal This is probably, so he said, even if there is a deal, it likely won't be a sustainable deal. I mean, this is where we are.
Yeah.
This is exactly what it is. We get like the makings of a deal, and then 3 days later, it's missiles flying again. So, do you think it's ever going back? Iran has already said the Strait is not going back to the way it was before the war. There's going to be a continued, like tensions over here. It's just not going away. And this war has been going on not just for 6 months, it's been going on for decades, Joel. You know this. Obviously Israel
Decades.
and Iran been
Let's try centuries.
Centuries.
Millennia.
It's never going away. So now, the U.S. is very involved in it. Can the U.S. get out of this? They'd like to be out of it. Trump wants to be out of this. But, how do you get out of it? It's not very easy. You've started a war. It was the same thing with Iraq, going back into there. How do you get out of it? You go in there and you take out Saddam Hussein. Now the whole country's a mess, and you're trying to figure it out for years. So, I mean, it's a tricky situation here. So, deal or no deal, we're just going to keep going around this. It's going to be a deal tomorrow. Then there'll be missiles flying. There'll be no deal. The one thing I will say is the market's reaction now, it's starting to become numb to this. Like we've said this before, it's starting to become numb again. Because you got Scott Besson saying there could be a deal as early as tomorrow. And the S&P's rallied 6 handles on it. If this was 2 months ago, we rallied 60 handles on it. So the market is completely becoming numb to the rhetoric because none of it's believable from both sides. You can't believe what's happening over in Iran. You can't believe Qatar. You can't believe the Trump administration. You can't believe anything. So, I mean, that's where the market is. Nobody believes. The market is starting to not believe any of it. But USO is selling off. So, we sell off again on the potential of a deal. We've rallied. We've sold off. We rally. We sell off. We go around here. But I just think if you're coming in selling oil today, oh my gosh, it's going to be a deal. Oil's over now. I mean, you want to be selling into the rips, not into the dips.
Are we cool going to our next macro item and moving away from the Middle East conflict?
Yeah.
We covered the war for 2 minutes. We don't really
that was 2 minutes too long.
2
minutes too long. Okay. We're done deals or no deals. Yeah, go to the next one.
Okay, Jill, so bring up the chart of AAOI, Alpha Alpha Oscar India. This is an optical name. At least it has been clumped in with the optical names. Look at the chart around 6 a.m. This headline that got the whole optical space moving. Trump administration is drafting a ban on Chinese data center devices. The Trump administration is drafting a ban on Chinese data center devices. AAOI, it seems like on that headline right around 6 a.m. must have rallied like $20, maybe $15 or $20.
The big moves in these optical names here. And they're hardware, so it's the perfect day too, because hardware is ripping higher too. So you got AAOI up 20%, LIT up 13%, LWLG up 15%, Coherent, another one up 16%. The individual stock moves are astounding. The S&P's volatility is nothing, but under the hood, it's huge winners and huge losers every single day. Like the S&P does nothing to tell you what this market is really doing.
Zero.
This market is crazy under the hood because what they do is they're buying something really hot, then they're selling something off really hot just to balance out the index. It's a crazy juggling act underneath the hood. But the individual stock volatility has got to be off the chart. So you can look at the VIX and say, oh, it's not that bad. But individual stock volatility is crazy. You have Micron going down 20% one day, then up 20%, then down 20%. Now we're going to rally 5-7% here this morning. The moves are crazy. You're caught on the right side, you love it. You're caught on the wrong side, you're dead.
All right, how much detail do we want on these stocks? Do we want any technicals on any of these?
Yeah, AAOI. Go AAOI.
AAOI. I mean, what a beautiful looking chart. Undercuts the 200-day buyers. A Rochambeau. Old Joel would have said, oh, look at 120. Oh, that looks like a double top. No, says 120. Then 132. So let me see if I can find any. I don't see a daily high in this thing. This is not investment advice. Wow, this is even 120. What's this high? I don't see a high in here until 139.27. That's the next
where we're going? 139.
I'm not saying where we're going. I'm just saying there's nothing in the book. There's nothing. Just call it 140. I mean, this thing has been beaten up. It's way. It's all-time high was 233.67. I don't know what the short interest is in that. The algos are all geared up, so I don't even know what the title. Like you can chase all you want. I just see a daily high 139.27. Who else falls? LITE fall into this category?
Yep, up 14%, up 100 points.
Well, I do have 900 as a potential target. It hasn't hit that. It's traded up to 900 3 times since May. Target there. What else do we have?
Coherent, COHR is a big one.
Let's see what Coherent. Oh, that's only up 45. All these charts look the
It's a
same.
laggard.
I know. I don't even know what to say.
Michael Crockett all over it. He pays us $10 and gives us a stock tip. We love Michael Crockett. Sienna as well.
Sienna's a good one.
Correct. Sienna's a big one.
Oh, you know what? Michael Crockett, he might be up there with Jay as far as being around. Michael, how long you been around? Let's see. Michael? Yeah, because we got to get some interaction here. Claude says we don't interact with you guys enough. You keep throwing us 10 spots, we'll interact with you a lot. Just think if everyone in the chat gave us $10 every day, that would be fantastic.
Yeah, that would be pretty good.
All right. So that's Sienna. Are we done with that? What about Poet?
What about
Poet?
Yeah.
Poet?
Take a look at it.
How does Poet fit into this? Is Poet in there?
Well, here, we can do this live on air.
I don't even know what the hell Poet is.
If Poet moved at 6 a.m., then it's being clumped in with the optical names. If it didn't, then I don't think it is. Let's see.
This is like intern's favorite stock, this Poet thing. Poet Technologies. Yeah, it's optical.
Look at when it moves.
Poet's in there.
It's in there.
It's in there. I would trade Poet. I gotta start trading more Poet. Okay, it's in there. I didn't even know it.
Wow.
Stock. I had it for dead, really. When it went from 20 to $6, I wrote it off. But it's starting to come back. You can't rate anything off in this market. It's a bull market. The stocks will come back eventually. Everybody's writing off hardware yesterday morning. And they're like, whoa, man, that hardware bottom, Denny, that you called. Oh, man, that was a bad call. It was a bad call. We never breached the low. I was like, did we breach the low? Did Micron take out the lows? Did Sandus take out the lows?
I don't know.
Then what I said in the think tank was, I'm like, if you are underweight hardware and you wanted to buy it, you got some nice lows to lean on because we came like within $40 a low on Micron yesterday. Now we're up over 100 points from that low, 120 from that low. So you had an opportunity yesterday to actually dip your toe into the hardware names. We buy dips. Good opportunities. I'm loaded up with hardware, so I'm not buying anymore, but there's a lot of dips to be bought. I did buy Nokia, the only hardware name that I did buy. That's doing pretty well here this morning on the recent pullback here.
Dennis bought that
give it all back.
The STN think tank, and it went straight down 50 cents. I watched
Nokia?
it. Yeah. You bought it?
Like a week. That was like 2 weeks ago. Yeah, I bought too early, for sure.
And
you know what? The good news is when you're investing in stocks, you don't have to get the timing right. What do you mean, Dennis? What do you mean you don't have to get the timing right? Well, if you're not on margin like Leo, you just sit back and wait. Eventually, it works itself out if you got good companies at reasonable valuations. I just think Nokia, we've had the whole move 8 to 17 because it's this big hardware, AI name. It gave it all back. I'm like, okay, well now I'm getting it without the AI in it. So I'm like, I don't think it's a bad bet at like 859. I bought it 881, I think. So make fun of me all you want, Joel, but I'm up 10%.
I know. Well, when it got back to 881 the next day, I'm like, Dennis, are you selling your Nokia?
Didn't sell it. Still in it. Haven't sold any shares of Nokia. But I think on pullbacks, I think hardware is a buy. I do believe the Leo bottom is in. I think you could see that as the low of, the low going forward here. So I think actually on Micron, I still think sideways for the one. I think the high for the year is in at 1200. I think the low was made on the Leo bottom at 737. Still to be determined. Got a little bit dicey there yesterday morning when it was going down. But again, the hardware name gets kickstarted, And obviously, the Trump, there's been some headlines here, multiple headlines that are kickstarting hardware. But, a little bit of this hardware rally also, you're going to say the Kospi and SK Hynix. And for sure, those things are moving. SK Hynix is, started blasting off last night here too. But what about Palantir? Because we saw.
Oh, yeah, baby. Palantir.
Let's take you back to Microsoft Day. What happened in Microsoft Day, 4 days ago? Well, that kickstarted the biggest software rally ever. Did it, though? Did it? No, IGV didn't even really go up that day. You know what it kickstarted? It kickstarted our hardware rally along with the Leo bottom. Why? Microsoft's not a hardware name. Why would that happen? Okay, well, let's take you through the ETF effects and dig down And we're just, obviously, this is a little bit of like reaching, but I think it's there. So give us the earnings for Palantir. We tell you what the stock's doing, and then we're going to take you through the ETF effects.
All right, so the report was solid. They reported 41 cents. Analysts were looking for under 35 cents. Sales coming in at 1.94 billion. Analysts were looking for about 1.8 billion. The guidance was good. They're expecting Q3 sales 2.16 billion. Analysts are under 2 billion. They also raised their 2026 sales guidance pretty substantially. They raised from around 7.6 billion up to 8.15 billion. Analysts are all the way down at 7.7 billion here. The expected move for Palantir overnight was about $22 or about 15%. Why the expected move is really important here, and maybe we can zoom into the chart a little bit, is because we got it. We kind of grinded up to that expected move. We were kind of grinding up to the expected move. And then once we got through the expected move, the stock kind of blasted off like another 3 or 4 or 5 points.
Yeah. It matters how you get there. So note right now, and this could be a cuttable clip here. I'm telling you right now. Okay. So when you were doing expected moves, and what was the Palantir expected move? 12 points?
$22. Wait, sorry.
Because it's only up 19, Brad.
It was $22. 15%, $22. That's what.
No, it's only up 19. That's 20. Palantir's expected move was 22 points. It's not there yet.
That's not right. I think that's
that's not right. I thought it was 12 or 13.
I think it was.
So don't start clipping yet. We haven't figured out.
It was $13. It was
13 points.
13.
Okay.
Yeah. 10%.
Palantir expected move 13 points. So when you guys are trading inside the expected moves, it matters how it gets there. If it violently spikes up there on the initial, there'll be resistance there right away. But when it slowly grinds its way up there over hours, that's like thick. It's not going to easily sell off because now, remember, price is memory. There's lots of transactions that have happened in here. It didn't just blast up there. It can blast up there because why can it blast up there? Because all the algos, everybody gets the hell out of the way when the earnings report comes. And then all of a sudden the earnings comes and then orders start to fill back in. So when you blast off, you take everything out below and you've created this this gap here below, this short-term gap. And sometimes the stock can come right back down. When you slowly grind up, you're getting back in and filling, you know what I mean? As people buying, selling it, they're putting bids out there too. So this slow, steady grind, it's harder for the stock to take off, tank right back off the expected move. If you want to be fading off expected moves, you want to see it get up there quickly, not over the course of 2 hours. This took a long time. It was like you said, Brent, the slow, steady grind to it.
Yeah.
And then an hour and a half later, we're at the expected move now. It should fail here. Well, no, it shouldn't because it's grinded its way up there. So now it doesn't matter as much. And it kept grinding its way through. And as it got through there, it actually started picking up even more momentum because, it's like everybody who's playing it short off that is getting caught then. So then you even get more momentum. So then you're up 6 points above the expected move. So bottom line is if you're trading the fade trade off the expected move, you want to get up there quickly, not slowly grind its way up. It matters how it gets there.
And just to highlight that, here's 139. So you got the spike over 142. So maybe you were thinking, oh, man, it came in. But let's see how it held the 138 bid. And it was right around there. I know we're looking at it. I will just give you the pre-market high as a potential target, 147.50. That's a double top on your 15-minute chart. So that's really all that we care about. A daily high also may act as temporary support at 145. You wouldn't see me buying a share there. Next daily high that you want to take a look at is 151.68. But let's see I see another daily high, 146.37. So there's your levels on days like this. Expected move. You just wanted to keep going. Where to buy this on a pullback? Looks like you do have some short-term traders at the 143.50 area. That's only based on the 15-minute chart.
Okay, so let's get this set up here. So this is kind of the core of what we want to talk about, how ETFs still, of course, are just absolutely dominating this market, and we're going to use Palantir as the example here. So last night, we have the Palantir report, stock rallies, IGV starts rallying. Also, Dennis is in the STN think tank last night. We're going, okay, are we setting up here for Palantir to spark a software rally? Last night, when I logged off at my computer around 5 p.m., 5:30 p.m., that's what it looked like. Now, Triple D, walk us through what has developed here this morning with these rotations into Palantir and seemingly out of software. How does that make sense?
So here's the best example. And if you can bring up, if you want to look
I'm
in the
doing
background,
it as we speak.
the IGV, look at IGV, which is widely traded here now. And there's some ETF effects, and IGV, trades pretty heavily during the day. We know a lot of people follow that software name. So there is an effect that I've taught before in the XLK. And it's the effect that when Microsoft has a really good day, Apple does not. Usually Apple will go the other way. Why? Because these two components are so big. And again, it's not as pronounced in the XLK as it used to be because of the changes in the index. But it used to be the XLK was made up of basically Microsoft and Apple. Those were two biggest components. Now NVIDIA's got in there and kind of messed things up a little bit. But if we're going back to years, I taught this like 5 years ago. So basically with Apple, it used to be 20% of the XLK, Microsoft used to be 20% of the XLK. Like I said, NVIDIA screwed that up now, so you don't see the XLK effects anymore. But what used to happen is when Apple would be moving up, Microsoft would sell off because the natural balancing act of the ETF effects is if the one biggest component is up huge, they sell off the other big component to make up the difference so they don't have to jack it too hard. Now we're starting to see that in the IGV as well. So when we have Palantir, and it's all just math, all ETF effects is math. So when you have IGV and Palantir trade at 8% of the IGV, and Microsoft 10% of the IGV, also Palo Alto Networks in there too at 10%, CrowdStrike at 7%. When you have Palantir trading up 16%, you can quickly say, well, 16% times 0.8, you're talking like about, what is that, 1.3, 1.4%, 1.3.5%. So IGV has to be up 1.3%. Just to account for Palantir because Palantir is up so much. Do you follow me? So if it has to be up 1.3% and IGV is trading flat, well, now you have to hammer other software names to make up the difference. So you think Palantir is going to kick off a software rally, and logic would say it would, but the ETF effects say not so fast because IGV was not trading up enough last night. Now IGV has actually turned to the red. We've got to actually sell off the other software names. So Microsoft gets hammered today. And again, Microsoft is probably some profit taking there too, but it's getting beat up here because it's been up ridiculously. But it's logical to take profits in there and sell that off to balance the out. So with Microsoft trading down 2%, that helps a little bit. You're going to see other software names trading weaker here too. Now, CRM is another one down at 2% here today. ServiceNow down 2.44%. So Palantir, you would logically think would kick off the software rally, but not the case. Same thing if we go back to 4 days ago with Microsoft when it was recording, was the same thing. Microsoft was up so much that they actually sold off some of the other software names. And now if you're selling software, well, we better go buy hardware. So it just snowballs from there.
It's wild.
So a little bit of today's hardware rally is, yes, there's macro headlines. Yes, hardware wanted to bounce. It was oversold yesterday morning. We talked about that. But it also is shockingly Palantir driving not the software rally, the hardware rally, because of the ETF effects. That, my friends, is crazy stuff. But welcome to ETF effects 101. Actually, that'd be 102 at least.
This is like advanced. This is like a 301.
This is advanced.
301. Okay.
Yeah.
ETF effects 301.
ETF effects
We're
301.
going into a little further. Okay, I'll give you that.
Crazy.
So,
now, for those of
that's
you,
the world we're in. We're in the ETFs world. And we're not saying ETFs are a bad thing, a good thing. We're not trying to judge. We're trying to say this is the world we have. We have to learn how to trade within it. And if you aren't paying attention to ETF effects, man, you are missing so much valuable information.
let's have Dennis write an article on this. If you want Dennis to
I don't write
an
articles. You can write the article if you want, but I don't.
No, then you just
gave
mark
up.
it
One's-
off like with a pen and like I did all this stuff.
One's in the chat. If you want Triple D to write an
I
article,
will not
on
write
this,
an article. I just spoke it. You can
Give
write
him
the
all
article.
the
AJ does such a great job. Yesterday when I had a rant on something, I don't even remember what it was, and AJ wrote the perfect article for me in the background. AJ rocks, man. AJ rocks. So we have AJ who writes. What was the article he wrote yesterday? I already forget.
It was that GameStop should buy PSA, not eBay.
Oh yeah. So the funny thing, so he wrote the article, GameStop should buy PSA. And I'm like, oh my, and then I tweeted it out. I said, GameStop should buy PSA, not eBay. And people are like, why would GameStop buy Public Storage REIT? I'm like, oh my gosh. Not
the
PSA,
same company.
the stock. PSA, the company that grades sports cards. So, I mean, I didn't even consider that. So, obviously, people are obviously thinking stocks was stocks. They thought I was talking about public storage REIT. No, I'm talking about the actual authenticator, Pro Sports Authenticator, the company that creates sports cards. It's a private company that's worth $4 to $5 billion. Anyways, I think I'm right. I think Ryan Cohen, you're looking at the wrong target. Go buy PSA. But that was a whole tangent. But anyways, going back to it, AJ Fabino, we love you, man. He writes these articles for me. So I just rant a bit, and then he writes an article. It's great.
Oh, I tried.
Yeah.
Thanks, Joel. I know you did.
But do people know Dennis used to write for the CFA magazine?
I wrote for 6 years for CFA magazine. I did.
Probably
But then
a great writer.
Then I got too busy with kids and podcasts and all this other stuff. You guys took me over, and I was like, I'm too busy to write now. Writing takes so much time. Well, actually, it doesn't anymore. You have AI, so you can just speak to it and it can write the article for you too. But it's not going to do as good a job as AJ.
Okay, this
not
is
going to do as good a job as
AJ. This is a tangent. Okay.
That's okay. That was a fun tangent.
It was
Joe got to hear a lot of that conversation also, which I think is probably good for what we're going to talk about with Joe.
Bring him in.
Joe, are you ready? He's getting up from his desk. Hold on right now.
Oh, he's getting ready. He's getting ready. He's going to be there in a second. Give him a second. He'll give us a thumbs up when he's ready in the background there. So he's getting to his desk.
He's like running
but
through
the ETF, I want to talk to Joe about ETF effects too. So I don't want to change the subject here because this is what moves markets. We talked with that obviously yesterday with Tim Quast, and I'm telling you, man, I see this every day. ETFs is what matters. Like you're seeing Microsoft sell off, and you have a Mag 7 sell off. So, that's, maybe, Bezos kicking it off with Amazon, which we can mention that in a second too. But I mean, ETF effects are real and they move stocks in opposite directions a lot of times. So you think what you think might logically happen if the ETF effects don't agree, they trump all. ETF effects trump all.
Can we just go through these stocks real quick just to illustrate this? I mean, Microsoft had a huge run up 10 sticks. I looked at CRM down 395, Oracle down 237.
They hate software today. Palantir's fault.
It's all Palantir's
too big in the IGB.
ServiceNow down, Adobe down.
Yeah.
Fortinet. FTNT for those.
Well, they don't sell off cybersecurity.
No, not everything. Fortinet.
Cybersecurity. The Palo Alto, those stocks only go up. They don't sell off for any reason. They say screw the ETF effect.
Yeah, we're getting
cybersecurity trumps ETF effects. Maybe that's the way it's got to be.
Look at what Lombardo says. God bless the ETF.
Yeah, it's opportunities there. If you're paying attention, there's good opportunities in this. So. Okay, right. I want to get Joe Saluzzi's thoughts on this. He looks like he's ready. I want to see what Joe thinks about the ETFs.
Okay.
There he is, Joe Saluzzi.
All right.
Oh, Themis Trading. Joe, we need you. Talk ETFs.
You guys are jacked this morning. I was listening in for a while. A little extra coffee there, huh?
I know you study Joe, and if you don't know Joe Saluzzi, he's been studying market structure since like 2008. I met you back, I think 2009. We were starting to talk market structure, and you are like, I've learned so much from you over the years. I know you got an opinion here on the ETF effects too. What are your thoughts here? We obviously have more ETFs when we do stocks now. I mean, we have leveraged ETFs, triple long, triple short. We see the LCID double long ETF go to zero because LCID in one day went down 51%. The swaps take you right out on that double long. What do you think? There's so much happening here with ETFs. Should we get more? We just need more ETFs? More.
This is, I'll go back to the regulators. They once again, they screwed it up. The SEC basically gave a free pass to the ETF companies a few years back saying you can file and it will go through unobstructed unless somebody has unless we want to stop it here. In other words, they're approved upon when they file them. So these things, if you look at a graph of how fast the ETF since 2021, like you're saying, we have more ETFs than stocks. And the problem, like you mentioned, are not necessarily regular ETFs because, I mean, ETFs are a good thing in general, right? The spiders are a good thing. If you want to invest in a particular sector without having a company-specific risk, that's a good thing. It's a great idea. But now when you're talking doubles and triples, inverse doubles, backed by swaps, not backed by necessarily the underlying asset, you've distorted supply and demand. And that's really the bottom line here. And when you distort supply and demand, you distort prices. And that's where we are. But, to unwind this thing, I don't know how they unwind it. It's just going to get worse. Look at South Korea, right? So there they are out there trying to figure out, holy crap, we've got too many of these leverage things. They're trying to put a stop to it. I don't know. I mean, the regulators need to step in. I would, first of all, I would get rid of all these ridiculous doubles and triples and leverage ones. It makes no sense. It's only going to get worse. So it's gotten to the point where, it's out of control, basically.
I mean, this is the issue that I have with the doubles and the triples. We saw it with Lucid last week, but they don't have triple longs on single stocks. They probably will soon because, why not? They probably will get there eventually here. But the reason you shouldn't, we learned from LCID just a week or 2 weeks ago. When a stock falls, even for a split second, so Lucid has this, erroneous headline that wasn't even true, and LCID tanks 51% on it, then bounces all the way back, most of it that day, and the next day is actually green. The LCDL, which was a double long LCID, actually kept trading and then started bouncing back too, but they said, not so fast. Trade for an hour and a half after. And then the swaps dealers who are on the other side of this are like, well, wait a second. It went down 51%. You're belly up. Like we don't go into the risk. So then they pulled it and everybody's at a zero. I mean, so if we create a triple long ETF or then we have triple longs on the S&P, but let's just say hypothetically we get some awful Black Monday that the S&Ps fall 34% today. Probably not going to happen. We got the Band-Aids. We've got some stuff out there. But if it did, all those triple longs are worthless. They go to zero, right? Yeah. And even if a flash crash, Joe, take it back to the flash crash. If we had a flash crash happen, all those stocks would bounce back, but all those double and triple longs would be wiped out.
Right. I mean, look about the risks that you talked about. Right? The risk, they're supposed to be monitoring. These ETFs are supposed to be neutralizing risk. In fact, what you just said there is they're adding exponential risks to the system. That brings me back to, remember the Credit Suisse VIX ETFs. I forgot what it was. That thing blew up, right? And that's what happened. And that's what we're talking about here. And it's just going to get worse and worse until some adult decides to step in and say enough is enough. But the problem is the industry is making a fortune off of this stuff, and obviously nobody wants to complain on that side until it's too late.
Well, and you've, through the years, obviously, we've looked at market structure and, you can talk, the rise of the bots, whatever you want to call it. I mean, it's been, it's crazy how much it's algorithmic driven now. It's crazy how much, the exchanges, volumes come off the exchange. There's been so many, changes over the course of the last, when we started talking 2009, 2010, we were worried about off exchange trading. It was like 33% of the volume. Now it's like 54 and it's just getting worse all the time. And regulators like, well, so what? The markets are fine. Well, they're fine until they're not, which you've said before too. You can talk about liquidity. I mean, we've seen two flash crashes, 2010 and 2015. Can it happen again?
Absolutely could happen again. It could happen right now as soon as we walk in there. And, listen, the reason why we have flash crashes is because most of the liquidity is fake. I call it fake, but it's garbage liquidity. It's these market makers who could pull their quotes at any point, hit a button and walk away, and you will get a vacuum of liquidity. So that could be a news announcement. That could be a glitch in the system somewhere, and you'll have a vacuum just like you did then. There's nothing. Now, we have single stock circuit breakers. We have obviously market-wide circuit breakers that will stop it, but it doesn't mean you can't plunge 7% in a millisecond. Absolutely.
All right, Joe, let's talk about how people or Truth Social is using this new data and the HFTs, the new data feed coming out of Truth Social. This is all kind of fitting in here. Let's talk about that.
Yeah, that's another. It's funny because my phone's been ringing off the hook on this one over the last week or so with different media people calling in on it. Because I guess they Googled and they found our book, and the book was how high frequency traders are ripping you off, basically, was the book subtitle. So, but the scary part is nothing's changed since that book was written, which was 2012. So the Truth Social feed just kind of is another data feed that fits into the HFT model. So, it's similar to NASDAQ's proprietary data feed of stocks. It's similar to the Wall Street Journal's or any news organization's data feed. The problem, of course, is who's putting out the information and what's inside that information, which is a very, very valuable thing. But the bottom line here is this is a data feed for $100,000 a month. $60,000 a month if you go for a 3-year subscription. So better sign up right away, guys. And you can take this data from Truth Social's posts, which are mostly the president's posts out there, and get it instantaneously. Now, this is available. Here's the trick for these guys. What they say is it's available to everybody. You can buy it, Dennis. I can buy it. And that's true. So they can say, well, we're not supplying inside information. We're making it available to everyone at the exact same time if you pay. But the problem is, if you don't have a system, a high-powered HFT system to connect to that data with microwave networks, co-located computers, all sorts of feed handlers and everything else these guys use, it's worthless. The data would be worthless to me. If I paid $100,000 a month for it, it would be like throwing $100,000 out the window. It means nothing. But these guys, the best. So now think the biggest of the biggest HFTs, the best of the best. And I won't name them because we all know who they are. They're going to connect in, and they're going to get this special feed now, and they're going to combine it with all their other feeds, with all those other data feeds I mentioned, all those other currency markets, commodity markets, crypto markets, you name it. It all goes into one big, giant computer system of theirs. But this was a missing piece. So for them, it makes their model even better. They have no choice. I almost called it a prisoner's dilemma, where if one big HFT has to buy it, the other one has to do it, because that's, they're fighting against each other, basically. They're not fighting against us. They beat us every time. They're looking to beat each other. So this is just another piece of the HFT puzzle that's been going on for many, many years.
It's just, the edge and the advantages here. And like we've said, it's all down to milliseconds here. And, for the little guy, and at this point in time, it's not even no sense worrying about it. I mean, it's here. It's the market we deal in. This market is rigged on all fronts. It always has been, and it always will be. But now, it's just another, if you got President Trump's feeds now are going to be delayed basically to all of us, unless you pay $100,000 a month, and then you can get this, quicker millisecond feed faster. But like you said, it's going to be useless to most people anyway. So
right, it became an ethical issue also. A couple of guys have asked me, what about the ethical concerns? And I said, that's not for me to judge. I don't know. Should somebody be sending out the government's information? That's a whole different story, right? And that's a bigger story when if I was Senator, XYZ from whatever state, they're going to have a problem with this, and they're going to make a big stink about it. But in the end, nothing's going to happen. This is going to be out there, like you said, Dennis. It's another piece of the puzzle. Now, I would say here's one thing that does concern me, and it ties back to the conversation that we just had. If let's just say there was a post from the president that was very, very meaningful. I'm going to make this up. 100% tariff on every country in the world starting at the end of today. Let's just say it like that. That would immediately cause a massive move in the market, right? Similar to what we saw on Liberation Day. So if I was an HFT and I was subscribing to this feed and I got it a millisecond ahead and I saw that tweet come out, I know I'm going to have a risk problem on my model really soon. So I probably would cancel everything. I would probably just go in there and immediately cancel and have an automatic cancel, which they've done in the past. In that cancellation, if an HFT, a massive HFT did that, and all the other hanger-ons that follow each other, you'd have a flash crash, because you would have a massive evaporation of liquidity, and all of a sudden markets would spread super wide. No one would know what's going on. People would be starting hitting bids and so on, and it would be flash crash-esque. So that part does scare me, that type of powerful information coming through some of this, and only certain people seeing it with that much ability to cancel an order, that does scare me.
What do you do? Like, how do you, as a little guy who obviously can't compete on any of these fronts, like, what do you do? What's the solution? Well, this is the market we're in. If we want to trade this market, obviously we've got to trade, with a game that we know there's other players that have an advantage over us. How do you compete, Joe? How do you, when you're executing orders, what do you do?
Well, you don't play their game. That's number one, because we'll never win that game. You're not going to beat them when they're spending millions and billions of dollars creating these systems and getting access to information that we don't have, frankly. We have information, but we don't have it in that speed. So you play a different game, right? And my job during the day is to execute orders for my clients, which are hedge funds, mutual funds, pension funds. So I'm looking at what we call a parent order, right? So the parent order is buy 100,000 shares of XYZ. But throughout the day, I've got child orders that are going in the book, and I'm executing child orders as to, but I'm looking at my bigger picture. My bigger picture is, here's my 100,000 shares. What's my benchmark? What is my bogey? What am I looking at? Don't be affected by every little trade, but follow your strategy. So if a market's moving, we can scale it up. We can go back and forth and so on. But my job is to execute and also not get spotted by those HFTs who are reading the data feeds, who are looking for me throughout the day to see if there's a pattern, and then can kind of just take advantage of me. So don't play the game. You're not going to beat them on speed. Stick to your strategy. If there is such one of these flash crash type events and you have this evaporation of liquidity, then you might actually take advantage of it, which some people did back in the 2010 flash crash. If you were patient and didn't, it was kind of scary. If you guys remember when that stuff
Well, then
happened,
they busted your orders. Then they busted them on you. Human being that bought Accenture at 1 cent, they said, nope, not for you. We're going to bust those orders on you because our high frequency traders lost too much money in this. So now we got to, like, the little guy can't win. We can't let the little guy win.
The regulators basically drew a line and they said, okay, everything below this line, they randomly drew the line. Everything below it is busted. Everything above it stays. So, since then they did make a rule called the multi-stock erroneous trade policy. So there is some, they tighten that thing up a little bit. But you're right. It could happen where all of a sudden you think you're getting a discount and you're like, oh, I'll buy this stock at $10. It was trading at $40 a minute ago, and then they're going to bust it on you. So, and then you're left with an unhedged position, by the way.
Oh yeah, it could be real bad. I mean, they could bust your buy and then not bust your sell, and now all of a sudden I'm short and I'm getting killed here too. What a mess. Exactly. I mean, when markets fail, and they did on May 6, 2010, it creates such a huge mess here. But again, it's right back to, what have we encouraged? We've only encouraged very millisecond market making. Like, the market makers used to be humans on the floor. They're not moving their orders that quick. I mean, now it's like it's gone in like the, way less than a blink of an eye, in just a few milliseconds. They're like, oh, there's risk out here. Let's get the hell out of the way. Just like during an earnings report or during, some, economic or, a Fed decision, you see the liquidity, Joe. It's like there. And then a minute before they pull all their orders because you don't want any liquid be picked off nearby.
They call that providing liquidity. The HFTs crack me up. I laugh at these guys because they claim to be market makers. And there are some that are market makers for retail orders, right? And they have these 605 reports, which they will measure their performance. They will measure, and then honestly, during a calm market, they're going to give you a good fill on your market order going for 100 shares. But most of these bigger HFTs, the ones that you've never heard of, most people have never heard of these people, here's the key word. They have no obligation to supply liquidity. They do not have obligation. They're not market makers. They claim to be bona fide market makers and take advantage of the locate rule, by the way, on the short sale. They don't have to get a locate if they're market makers. They're not market makers because market makers have to stand there in good times and bad and take those hits. These guys can hit the button and walk away. So I would argue that that's a part of the problem, is like you just mentioned, Dennis. The evaporation of liquidity is because these guys could walk away anytime they want.
Okay, on the line, Joe Saluzzi, Themis Trading here. Want to just last time you're on, you talked about the trade through rule, and I know you're against eliminating. Any updates on that?
Yes, actually, matter of fact. So the comment period is open. The SEC has it. It closes on August 17th. There have literally been hundreds of letters already filed with the SEC against this proposal that they want. The SEC wants to remove the trade through proposal, which basically means if you're the best bid, let's just say the stock is 10 cents, 15 cents, and you decide you want to be an 11-cent bid and you want to tighten the spread, you post a limit order. Now, under the new proposal, a seller can come through and say, no, I don't want to sell it to you at 11 cents. I want to sell it below you for whatever reason. In other words, avoid your quote. So you, the person who created the best bid and tightened up the spread, could be disadvantaged. This is a very, very bad proposal. I would say about 99% of the retail letters that I've seen are against it. Numerous bigger institutional investors are against it. The only ones that seem who are in favor of it, surprisingly, the HFTs and the proprietary traders who know that the less rules, the better for them, and also the crypto firms and all these crypto-related people who are trying to come up with these tokenized securities, which is the holy grail of crypto. They can't wait for tokenization, and they're going to create this whole little side market. Well, Rule 611, which is the trade through rule, causes a problem for that. So the good news to report is that the letters are being written and the SEC. So against this proposal, the bad news is there's only two commissioners at the SEC, the chairman and one other commissioner. And this is basically a kangaroo court at this point. This thing is done. This is a done deal. They're saying they're talking to investors. They're saying they're talking to the public. I call BS because they're going to approve this regardless of what we say. So it's frustrating as hell, but I can tell you that some of these letters might then go into a court case. So if someone comes out there and says, no, I'm going to challenge this because you ignored all of the letters, some that had very good economic analysis and very good reasons why you shouldn't approve it, and you approved it anyway. Well, now I'm going to sue you. I would expect that to happen.
All right, that is wrapped it up with Joe Saluzzi. Themis traded, talking market structure, HFTs, True Social. Joe, it's always a pleasure. You're getting a lot of accolades here. We're going to be dialing you up again real soon.
You bet. Thanks, guys. Thanks for having me on. We'll talk to you soon.
Thanks so much, Joe.
You got it.
All right, love Joe. And I threw that. Not to toot Dennis's horn too much, but he wrote an article in January of 2010. There was a flash crash in Rambus, and he said, what if this happens in the market? And I put the link in there, Elite Trader. Yeah, back in 5 months before it happened. So everyone, that's a good read. And
we were talking flash crashes. It was that you could just see, and it's market fragmentation. It's homogenous liquidity. So many reasons why these flash crashes occur, but we don't want to get into more market structure here. Joe covered it really, really well. So what we do need to get into is a lot of earnings reports here, because we got a couple hundred companies reported last night, and there are some big ones. One's driving in the hardware trade, Caterpillar. Holy, benefiting. It's an AI stock, and it's moving here this morning. Talk to me,
holy cow. What a report here from Cat this morning. They reported $8.17 in adjusted earnings for Q2. Analysts were all the way down under $6. They beat by more than $2. Their sales beat also by more than $2 billion. They report about $20.5 billion for quarterly sales. Analysts were around 18.5. Was there guidance in the press release? I'm scrolling through the press release here real quick. I don't see guidance initially. I don't think they gave guidance for Caterpillar. Stock trading up 12% here, almost $100 this morning.
Holy Joel, what do we do? The Cat, what do we do?
The Cat is on the prowl. Well, disciplined traders would say, well, the 50-day moving average is 919.23. We're trading above that. So I'll sell a few to you right there. Then other traders would look at the next daily high in this, and then that comes in at 938.58. So there's a couple targets. Looks like we're strong bid here. Working on a red candle here, so look for that for a possible indication that your pre-market high can act as resistance. But right there, folks, nice move by the Cat. And real quickly, not to get too many numbers in here, I wonder what Michael Burry's doing on this move. Oh, wow, the 50%. Oh, boy. If you want to hold out for that, well, it's already above it, 922. Lot of confluence up here at the 920, 925 area.
Going the other direction, Spotify, SPOT down $30 here on its report. Defensive stock. Why is defense? I got this subscriber base. It kind of is lower beta, which is crazy to think about, but it does. Anyway, stock getting hammered here this morning. How'd they do?
Spotify report here. They report total sales of 47.8 billion. I believe this is euros. Yes, euros. So we don't have a clean comparison here. Monthly active users were 777 million users. That was up 12% on a year-over-year basis. Shares here this morning are trading up.
Down 30.
Down. Excuse me, down about $35 or so for SPOT.
Oh boy, this is a tough area. I'll just give quick technicals on this. Your next daily low right here. If you were waiting to buy this, July 17th low, 456. You're right there right now. Hanging out at the lows of the pre-market session. Looks like we want to press just a little bit lower. The bad news is if you lose that 456, you don't have anything until closer to the 440 area.
Retail trader retail and consumer may not be dead here yet, because Wayfair exploding higher here, reporting its strongest free cash flow since 2020. Talk to me about W, Brentster.
All right, Wayfair. We'll get Joel's chart on screen. Wayfair reporting 95 cents, a pretty modest beat. Analysts were around 90 cents. Sales also a modest beat, 3.5 billion. Analysts were at around 3.47 billion. Checking for some guidance here. Did W give guidance? Nope, they did not give guidance.
They must have just said something on the call.
Maybe on the
because
call,
the
yeah.
stock was trading down early and we just exploded up about 20 minutes ago here.
Oh,
I'm
yeah.
just digging
Let's
in.
see.
It looks like Q3, high single-digit Q3 growth. So they're seeing. That's thanks to Street Insider for this, who must have been listening to the call. Wayfair sees third quarter adjusted EBITDA margins of 6 to 7%. They also see spike in 10% during the earnings call. So stock spiked up during this earnings call here. It looks like it's talk about the margin and single-digit third quarter growth. Wow, that is this is the market of crazy moves, because it's nothing really crazy on this report. There was nothing really crazy what I just read you right there. The stock goes up 19%. It's like these moves, man, and they're so fast. Like, bam, you're just from 90 to 106 in the blink of an eye.
Yep.
Yeah.
Yep. Did I ever tell you the story about we looked forever to get a new couch? I mean, we looked, because we wanted like that. And the guy told me that owned the store that all he does is short Wayfair. I hope he.
That's a tell in itself.
No, I mean, I was like,
buy Wayfair.
I'm like, I don't know, but I hope he, there was a good period to be doing that. I hope he reversed the strategy, or at least he stops. Big move just off the pre-market high of 107.62. That would be my initial target. And then go back to the dailies. Do we have anything on the dailies? Do we have anything? No. Some people are probably happy. Wow, I hope to see 103.89. Well, you got that, because that was a precursor to a really bad day. And then the bar of interest to me would be the bar where it had a high of 109.92 and closed at 104.39. So that's what you're looking at in Wayfair.
So many stocks reported here, and we can go anywhere. So if you've got a specific stock you want to talk, let us know here. We have about 4 minutes to cover earnings here yet. I'm just going to try to cover a couple more quick ones. I'm cherry picking. Snapchat, SNAP. It was a big one from last night. It was trading up at 570, then to 580. It has leaked it back. I guess once a dog, always a dog, and Snapchat starts to leak away the gains here. But how did Snapchat do last night there, Brentster?
Report was good. They reported a loss of 10 cents. That was better than a 12-cent per share loss expected from analysts. Sales coming in at 1.6 billion. Analysts were looking for about 1.54 billion. The guidance looked fine. They're expecting Q3 sales 1.7 to 1.74 billion. Analysts were at 1.7 billion. Snap shares trading up 6% this morning. Any thoughts on the Snap report or the chart, guys?
For me, it did have a double top here at the 50. Was that 508 high? Yeah, 507, and then the high yesterday. Let's see if it comes back. High yesterday was 508. Let's see. I don't know if you're going to get it that low. Looks like buyers are stepping up at 520. Crazy bar here, though. Big down day. This is the bar of interest. On that day, you had a high of 594, which you've not seen yet on the pre-market. A low of 510. So let's see if we can back and fill a little bit, maybe catch it at the 50-day and turn back up for Snapchat.
I just want to quickly cover On Semiconductor too. Okay. This was one reported last night and definitely helped kickstart the hardware rally a little bit too. Sure. ON started rallying, and we did see some other semis go. AMD was rallying, and then On Semiconductor obviously can move Texas Instruments, which is up, and Microchip, and ADI, and NXPI. So hardware is a little bit hot off the ON report.
And I think the report was it was not great. It wasn't bad for sure. The company reported 74 cents versus a 71 cent estimate. Sales coming in at 1.6 billion. Analysts were about 1.59 billion. The guidance was decent. They're looking for next quarter earnings 81 to 93 cents. Analysts are around 83 cents here for On Semi. Is it ON or is it On? I think it's ON, right?
I call it On.
Let's call it On.
But ON.
Let's call it On from now
on. Off. It's on today. Charts on, Joel. What is it doing? Are you selling the rep?
Snap off. Clap on, clap off.
Yeah.
What's interesting to me in this chart is it struggled at its 2-day high. Yeah, folks, it's up $5.10, but your pre-market high would spike just over 87. But your 2-day high is actually your 2 and your 5-day high are just under 87. You bucked off $1.50. If you really want this to be a runner, then you got to get the strong 87 bid here and work your way higher. So just look at trying to clear the 2-day high.
Let's put the calendar on screen here right now because we're going to get into our
meat
exciting
and potatoes tonight.
Yes, the meat and potatoes. We have AMD, we have SpaceX, we have Astera Labs, we have Pinterest, we have Arista Networks. Any highlights?
And then tomorrow, SanDisk and
Yep.
Western Digi. This next 24 hours to 48 hours of earnings here is a lot of meat. AMD matters the most. Obviously, stock's running ahead. It's up 20 points here. It's still a big position in my long-term portfolio, although I've lightened it up. I have lightened up the AMD, but it's been a great position here. I started buying at 81 and 90 and 120. I think I bought more, and that's $500. So I have lightened up. I lightened up some in the 400s. I don't know if I've sold any in the fives. I think I did sell a little bit in the fives too. But anyways, 503. It's up 19 points here ahead of the earnings. Just preview this one, Joel, because this one matters. It's going to move the entire market.
It held up, that held in. I mean, those other charts that we saw, the Western Digital or the Micron and the SanDisk,
held in well.
Yeah, I think it held up pretty well. I'm looking at this 513 area. That's your 50-day. Once you crack the 50-day, it's very important to regain it. Haven't hit that yet in the pre-market high 510. So let's see what happens. There were 2 really rough days in here on its way down. I mean, that hang around 550. Man, that really hung up here. It traded 550, 556 on July 23rd. July 23rd. Let's go to SanDisk. Where was SanDisk on July 23rd? 1700. Whoa. Well, I guess it coincides a little bit, but that had already had the big move down. So let's keep an eye on the 50-day for AMD.
For AMD, we are looking for earnings around $1.60. We're looking for sales around 11.3 billion. I want to say, when does AMD report? Do they report at 4:05? They report at 4:15.
4:15, is it? Okay.
I'm trying to remember if it's 4:05 or 4:15. I see an expected move for AMD of $50.
Huge move. It's going to be huge. It's going to be a mover here. So that sounds right to me too. And then SpaceX is going to report here tonight as well. SpaceX also has the lockup expiration on Thursday. So lots happening here. You know what the biggest rug pull would be though, because people are positioning themselves, sure, because this lockup's happening, and the expiration's going to be, and everybody's going to come in and sell. The biggest rug pull would be the rally before it to screw all those people. So we'll see what happens here on the earnings. I'm not sure the earnings matter that much because is there anything that we don't, unless they disclose a new contract or something, which could be a catalyst to go higher.
Yeah.
We just, this isn't a company that we, are expecting, to make a lot of money or make any money. So I'm not sure the earnings report matters as much as this coming lockup expiration, but we're actually rallying up. It was a nice reversal yesterday, a key reversal that is actually yesterday from 104 up to moving up to 116 here now. So you've got a few people caught short here. What happens now? Well, let's see what happens tonight on the earnings.
Yeah, I guess it would be a low bar here, right, for SpaceX. After
I think the bar's too high. Yeah, I think there's a risk to the shorts that they announce some new contract or something. That's something that Elon Musk would do. And what's he say in the call? Commentary from the call. It's gonna be like Tesla. The earnings are gonna pop around. It's gonna be the call though that could really move it.
Wow, Tesla a little bit on the comeback trail, but SpaceX earnings. Let's see, all-time low yesterday. All-time low comes in at 104.83, but that was not the all-time closing low. That's important. I'd like to note that the all-time closing low was 108.37. If you did the old undercut and rally trick yesterday, well, you made a few dollars because you had a low at 107.57 on Friday. You undercut that. You opened below it. You came back above it. I might not have been much heat on that trade. Yeah, there was a little bit of dancing in it. So looking forward to the SpaceX earnings 9 a.m. Can we have
News
any
dump.
more news on this day?
Oh, yes, of course we can.
I
Dig into the
am.
feed. We're looking here. Both me and Brentster are looking to see what happened at 9 a.m.'s
I'm
bunch of news
posting-
releases.
I'm posting a headline on AUR right now. Arrow McLaren adds autonomous trucking pioneer Aurora as an official partner. It definitely seems like a fluffy release. The stock AUR is not moving here, but I am going to post it. I think it is a little notable. Sentinel-1 expands collaboration with Amazon's AWS to deliver unified AI governments. Do we have shares of Sentinel-1? Yes, they are moving a little bit higher. Seems initially like a bit of a name drop press release. Let's click into it. Sentinel-1 announces an expanded collaboration with Amazon Web Services to deliver unified AI governance for Amazon Bedrock. No terms disclosed here. We have a ServiceNow press release highlighting a new product they are launching. ServiceNow delivers autonomous security. That's the name of the product. The industry's most complete security offering. Ticker NOW. Not really moving on that fluffy press release. Anything else sticking out here?
I looked through them all. There's some smaller ones, but yeah, like big names here. I don't see too much here, Brentster. Like nothing like it's going to be market moving here. So I think we're clear on the 9 a.m. news. Obviously, lots of earnings going to happen tonight. We're going to look at imbalances here over in the STN think tank here. We'll jump into some opening trades, see if we can get some opportunities here on this hardware versus software morning.
Yeah, and
and one last thing before I go. Want to wish my mom a happy birthday today.
Nice.
Yeah. Happy birthday, Mom. Okay. Boy, you guys got to show up tomorrow because we're gonna have another great show. We're gonna bring in Blue, and he's gonna talk a little about politics and electricity and water and the jobs data coming on Friday. So Blue does his homework. He'll be with us tomorrow. Everyone, have a great day. Thanks for joining us on Pre-Market Prep.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN Think Tank at stocktradernetwork.com.